The Organization of the Petroleum Exporting Countries was formed to give the biggest sellers of the fuel control over global prices. But its unity and effectiveness appear to be waning. OPEC members and 11 other countries had agreed to lower production in 2018, but by the end of the year, all but 6 of these 24 countries failed to do so. And one of OPEC's oldest members is ditching the cartel.
The state of Qatar has decided to withdraw its membership from the Organization of Petroleum Exporting Countries, OPEC, effective January 2019.
Despite the output cuts, the price of Brent crude dropped from $69 per barrel to less than $54 in 2018. That's pushing OPEC members to speed up efforts to prop up prices.
We made it in April to allow us to take the decision required before we end up the 6 months.
But even with a consensus, major oil producers may not be able to push up prices significantly. Demand for fuel is expected to remain weak this year as the pace of global economic growth slows. Shale oil producers from North America could flood the market if conventional producers begin charging higher prices, and some of the world's biggest buyers are putting pressure on the cartel to make oil even cheaper.
Saudi Arabia, if we broke with them, I think your oil prices would go through the roof. I've kept them down. They've helped me keep them down. Right now we have low oil prices, or relatively. I'd like to see it go down even lower.
Many analysts believe prices have bottomed out and should begin to rise again in coming weeks. But producers like Iraq, Iran, Venezuela, Angola, and Russia are desperate to boost revenues to resuscitate their economies. And any increase in prices could encourage them to increase their oil exports, sending OPEC's agreed output cuts up in fumes. Mobin Nasir, TRT World.
And Mobin joins me here in the studio. Hi Mobin, Happy New Year. So let's start by looking back briefly. There's no doubt that oil prices were under a lot of pressure. Tell us about some of the factors that affected that.
Well, it looks like the suppliers got trumped quite literally, didn't they? We've had oil prices were rallying ever since December 2015, and they were for at least the first half of this year. We saw the US restoring sanctions on Iran. That really encouraged OPEC to give up its 2016 output cut agreement. And then, of course, by August or by October, rather, all of that began to unravel when the US began to hand out waivers, essentially, to some of the biggest buyers who were importing from Iran. That, I think, really threw OPEC's estimates out of whack.
And so then, the countries like China, India, and even Turkey were part of those exemptions, weren't they?
Exactly, and those are the ones those are the biggest buyers, essentially. And then, of course, you had the October change of sentiment in global stock markets. We saw real gloom setting in over the economic prospects for the future, which, mind you, were always there. But I think when the stock markets turned, that really set in motion this whole slide in commodities and fuel as well.
Interesting. And one of the big announcements we saw last December was the fact that OPEC and its allies have agreed to cut production by some 1.2 million barrels per day from this month. What sort of effect might that have? Will it be able to boost prices?
I think if we look at Wall Street, the consensus seems to be that Brent should settle around 70, WTI around 60, 65. Those are the long-term averages anyway. But it's really interesting to see how the Russian president, for instance, just a couple of weeks back said that they're ready to be able to balance their budget at prices as low as $40. Of course, for shale providers, anything below 50 makes them unprofitable, and so that it seems like these prices should tend towards that $60 to $70 barrel price tag. At least that's the consensus that we're hearing on Wall Street.
Mm. And of course, the slowdown in China, we're seeing more and more signs as fresh data comes out of the world's second largest economy. What effect might that have on oil prices in 2019?
In fact, those are some of the demand side concerns, slowdown not just in China, but in other advanced economies as well. We could perhaps see that being offset slightly by any boom election year boom in India. But there are a lot of concerns on the supply side, and that's really what's making up most of those notes from analysts, fears of Venezuela, what happens if things get any worse there, what happens if the US sanctions actually do at some point cancel these waivers, or they will run out. Of course, there is a time limit on those. And then, of course, concerns like Brexit and the trade war and the US interest rates. So really, perhaps not as bearish as the last leg of 2018, but certainly a lot of uncertainty around oil prices still.
Yes, and we'll be keeping a close eye on that. Mobin Nasir, thank you as always.